And welcome. It's Mary Ellen McGonagle with your weekly Edge show for Friday, July 28th. Today, as usual, we're going to take a look at where the markets closed for the week and beyond. By that, I mean take a look at some of the sector rotation potentially shaping up, as well as industry groups within those sectors. It's all about uncovering where the relative strength is so that you can participate in that as the markets are this time continuing to move higher. We'll also take a look at some of the headline news that drove price action last week, a bit dicey, and what to be on the lookout for next week as we move into the normally rather quiet month of August. We're also going to take a look at the viewer question of the week, and this week it's all about how to trade these mega cap names that are coming out with really good numbers. And I'll share with you two names in particular, and we'll look at them today. So on the news front, first up, we did get second quarter GDP numbers, and it did show an increase to that 2.4% level, well above the 2% level that was anticipated. This came out on Thursday. In response, we did see interest rates rise because there was a sense that a faster growing economy could put the Federal Reserve in a rising interest rate mode as it relates to their rate policy. In addition, we did see the FOMC come out on Wednesday. They raised interest rates by 0.25%, very anticipated, very much a yawner there. But talking about future policy, the FOMC did remain undecided, which has the markets a bit on edge. It means that every single economic data point is going to be closely examined for potential Fed response, such as that GDP number that had the markets pulling back on Thursday. Also on Wednesday, we did get news that the Federal Reserve economists, now this is not the officials, but the economists, they did state that they no longer see the U.S. entering a recession, and that's generally good news. This is what investors want to see. It's called a soft landing, where interest rates are eventually tapered off, and we see the economy remain in a steady and potentially growing position. We also did see consumer confidence climb to a 2-year high. That, in line with that GDP number, did get investors again concerned about rate hikes. But today's news of core PCE data, this is the Fed's closest watched inflation gauge, and it did show inflation continuing to cool, hence a 2% rally in the NASDAQ today, growth stocks coming back from Thursday's pullback. Next week, we will get employment data for the month of July. Employment is another key metric for the Federal Reserve. It has remained rather heightened, so we'll see how that fares for the month of July. And then, of course, more by way of earnings next week. We have mega cap name Amazon reporting, as well as Apple. So we'll keep an eye out for that. So from here, let's go ahead and see where did the markets close for the week. And here we are with the daily price chart of the S&P 500. This is Thursday's slight pullback, and the markets did find support at this upward trending 10-day simple moving average, remaining in a confirmed uptrend. The RSI and stochastics both in positive territory, so good standing there. A quick look at the NASDAQ, and the NASDAQ had a little bit of a tougher go as far as its pullback, but it did recover nicely with the close back above this green 10-day simple moving average with your momentum in an uptrend. So we can see that this growth heavy index did recover from its rebalancing, and we are of course seeing earnings in some of these bigger NASDAQ names as well, and it does remain in an uptrend. Looking at the 11 sectors of the S&P 500, this is a 2-month daily price chart view, and I've gone ahead and sorted it by relative strength. Up here at the forefront, communication services, this group was up 5% for the week, and it is all about earnings. Their two heaviest weighting names, Alphabet and Meta, both up 10.5% for the week, most of that due to the report of their earnings. And these are the two names I'm going to review as we get to the viewer question of the week. But net XLC in a nice uptrend and trending higher. Also want to share with you this look at energy. It is continuing to trend mostly higher. I don't see a lot in the way of momentum, but companies here are beginning to report generally positive earnings as we move through. I'll share with you the price of oil, but we are also seeing a lot in the way of demand dynamics for oil amid reduced supply. So keeping an eye on that. A number of critical companies due to report earnings next week. So we'll see if that group can regain its upside momentum. Moving through, we want to take a look and also be aware of groups that are potentially pulling back. This is real estate, XLRE, and you can see we've had a 2-day pullback on pretty high volume. Higher interest rates on Thursday, not particularly good for the group, but we're also seeing weak reports from several heavyweight REIT stocks that are also pulling this particular group down. Not in a downtrend yet, but certainly of note that we are seeing at the very least a pullback. Up here at the forefront, industrial stocks remain in a nice confirmed uptrend. A little bit of a leveling off here, but generally quite constructive. We are seeing building related construction and other names in the industrial area that are trending higher, which is constructive for this sector. Financials also up here in the forefront. The group was down for the week, but there is one area within financials that are continuing to trend higher. I'll share that with you. But certainly when you see a sector getting into an overbought position with that RSI above 70, you would anticipate at the very least a pullback. This is very orderly. The sector did find support back above that 10-day moving average. So we are still in good standing there. So from here, let's move on and take a look beyond those sectors at some of these industry groups that I find super powerful in keeping you on top of what's taking place beneath the actual sectors. First up, KRE. This is that regional banking ETF, up 5% for the week. A couple of good news items out. Continued earnings from banks that aren't always positive, but they are coming in with earnings ahead of estimates. We also are hearing on Monday last week that Pacific West Bank is in the throes of merging with another large California bank. You may recall that PacWest was in trouble, but this was another positive news item for these banking stocks that are continuing to trend higher with that banking crisis beginning to, of course, recede the fears from that. Other areas that you want to be aware of, certainly from the technology and growth side, are semiconductor stocks. And they did have a tough week last week, but recovered and then some this week. And it was certainly all about earnings and in particular numbers from those mega cap FANG stocks that are talking about their increased spending in AI, and a number of these semiconductor companies that are faring the best are going to be those that supply either equipment or products for the equipment that are powering this adoption of AI technologies. Another area we can look at here in that tech space is software stocks, and you can see that of late they've been generally trending a bit lower here, pulling back, but certainly they've had an extensive move from May into this mid-July period. This pullback is very orderly, finding support at this 21-day simple moving average, still in a nice confirmed uptrend. I mentioned to you the price of crude oil. This is Brent crude, and you can see it dipped up above this downward trending 200-day simple moving average, with the price of oil now at about 83. So that is certainly a high number for these oil companies that can benefit from as it relates to profit margins. So that's certainly another driver among those energy stocks. And last up here, I did want to share with you this yield on the 10-year. I talked about that pickup on Thursday due to that strong GDP number. The yield on that 10-year did get up to that 4% level, which for investors can be really tricky. It's one of those hot button 4% levels that historically you can see the markets pull back, but certainly we've seen this happen in early July, and the pullback in the broader markets was rather nominal, but certainly worth keeping an eye on as yields do impact certainly high growth and other areas of the market. So from here, let's take a look at those mega cap, I still call them FANG names, Magnificent Seven, but we can take a look at, first up, Meta Platforms. They came out not only with strong numbers, but they guided their growth estimates higher. So what I did want to share with you with this particular view is the fact that the stock experienced a gap up into what's called a base breakout, and it did take place on high volume. It also took place on an otherwise tough day on Thursday in the markets. We did see a continuation rally today, up another 4%. So net up 10.5% for the week. And then, of course, from here, you're not going to want to chase a stock. So I will share with you how you can use precedents as your guide. The last 2 quarters, Meta Platforms experienced a similar gap up and a continuation rally. So we can begin by taking a look at their Q4 numbers here that were released in the beginning of February. You'll note that the stock had a gap up, then pulled back to its 21-day simple moving average, coming out of an overbought position. Of note is that this was a difficult period for the broader markets, so that pullback was more prolonged and pronounced, but it did eventually then segue into a nice uptrend. Here we are with Q1 earnings. We can see a similar gap up into a base breakout, and take a look. That pullback was much shorter lived, pulled back to this upward trending 10-day simple moving average and into an uptrend. We also did come out of an overbought position on that pullback. So if we take a look at where Meta is now, we are not in an overbought position, so the need for that pullback, or certainly the probability, is not as great, and you will want to keep an eye on these moving averages, because ideally at this time the 10-day moving average is at about 306. We closed the week at 325, so any pullback could be an ideal entry with Meta. If you go back and take a look at these gaps up, they were more than 10.5%, and that pullback again very orderly and into a nice uptrend. From here, we're going to take a look at Alphabet, and you will see that this stock similarly experienced a gap up into a base breakout. A couple of other characteristics of note here. Let's go ahead and mark this up. Here we are in response to earnings with Alphabet. It was all about improved digital ad sales in YouTube and other areas that really helped boost the stock. Take a look at this nice high volume on that gap up and continuation rally. You can see that here with Alphabet, the stock RSI is not overbought. We can also see, of note from my work, is this MACD black line up through the red in the very early stages of a potential uptrend, signaling further upside for the stock. We can go back to this mid-May gap up period for guidance, and you'll see that the stock never pulled back to that 10-day, when I'll share with you a 5-day moving average, how that can be helpful. But net Alphabet looking poised for further upside in response to strong earnings. Let's go ahead and add that 5-day simple moving average, and we can see how that can help as a guide when a stock really gets going. It can be then that pullback to that moving average that can be an ideal buy point. So keep an eye on that as the stock continues to potentially progress higher. That's it for this week, everyone. Have a fantastic weekend. I'll look for you again here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.